Growth investing delivered another cracking year, but 2025 really highlighted why stock picking matters.
Companies like Hub24 and Life360 and Austal were among this year's standout performers as they executed exceptionally well.
But others struggled. Xero and WiseTech fell into the doldrums on the ASX, while overseas giants like Amazon and Meta didn't exactly shoot the lights out.
And we want as few of those losers in our portfolio as possible. So we're asking the fund managers, what's your best growth stock pick for 2026 and why?
These answers are meant to be a bit of fun. Please do your own research and remember that any thesis can evolve as the year unfolds. Which stock do you believe has the highest growth potential in 2026 and why?
One stock that I'm watching is Hub24. The ticker is HUB. Hub is investing while all its competitors are distracted. At a macro level, we are really positive on markets. And one way to play that theme is through these investment platforms. Naturally, they see earnings upside as markets are stronger and they get bid up in market strength. Fundamentally, their competitors are distracted by First Guardian and Shield. Meanwhile, Hub is rolling out new products which we believe will only further enhance their proposition versus their competitors. They continue to surprise to the upside on flows, FUM, and advisors, and we think the runway has further to go. It's not necessarily a cheap stock, but we have seen the recent pullback as an opportunity to build a position in this name.
I'll nominate Qoria, which was formerly known as Family Zone. So this is not a resource name, but Qoria is a business that develops parental control software for internet access, essentially making the internet safe for kids. And Qoria is a business, a small cap business that's been listed for a while. 60% of its business is centred on US activity and growing out the business there. They've moved from 12 to 17% market share in that industry. The company is privately targeting 30 to 40% market share. We think they'll get there through a combination of new product releases and just greater penetration. They're among the top 4 players in the US. The important thing I like is that the business has been cash flow negative for a while, and we think 26 is the year that inflects and we start to see the business move to a cash flow neutral and then ultimately a cash flow positive situation. The balance sheet's not so pristine, but it's not so bad either. But we have a business that's very well managed with Tim Levy at the tiller. We have a business that's growing into a strong macro, it's growing market share, and we think will become cash flow positive, and that's extraordinarily advantageous for a group that's growing.
We're going to stick with a long-time favourite, that is Scali. So both domestically and internationally, the opportunities are abundant for Scali. So we're starting to see a pickup in the domestic furniture market. They have the opportunity to nearly double the domestic store network across their 2 brands, Scali and Plush. And that's pretty exciting. But the real opportunity we think here is international expansion. They've gone into the UK market with an initial foray into 20 stores. They've got their margins much closer to the Australian margins in very, very quick time. So the only question really is whether the product resonates with the UK consumer. And the early signs there are very positive. So if they can have a compelling offering in the UK market, delivering similar sorts of margins to the Australian market, there's a real opportunity for them to probably double their earnings on the Australian business in the UK. And if they're successful in one international market, there's no reason why they shouldn't explore expanding into a few other international markets.
Our top growth idea is SK Hynix. So you're seeing memory emerge as a clear beneficiary of this whole AI supercycle. And I think we're still at the beginning innings of that. So even though DRAM prices are up something like 150% since its 2023 trough, and some components are actually up, I think, 3 to 4 times over the last couple of months, we still think that the beneficiaries of that are going to be the 3 big players. So there's Micron, Samsung, and SK Hynix. We like SK Hynix the most out of that. We think that we're still really early in that journey. So what you're seeing with us and kind of our journey with AI, we can easily see us 1,000xing our usage of AI over the next little bit. And if we're at the forefront of that cycle, but we're early in the innings, we can see that coming through in things like the memory players, like SK Hynix.
I think it's a year to be really careful about shooting for the stars. 2025 has been great, especially at the smaller end of the market. There's been lots of profit. I think you want to be careful in 2026. Modest expectations are probably a good starting point. One sector and stock that I'm enthusiastic about is the non-bank lenders in Australia. They have risk. If we have a recession, it will be very bad for that sector. There's some really cheap stocks. One I like is Plenti. I think it's trading on a single-digit multiple of 2026 earnings. It's cheap and it's growing really quickly.
So it's been a little quiet for this one this year. High risk, high reward. It's a company called Dimerix. It's developing a drug for rare kidney disease. They're in the trial phase. So again, it is a high risk part of the journey for them. But really like the product, really like the team. The end market really needs something to help solve the issue here. And we think there's a lot of news flow, and this stock looks cheap and something that looks like it could have a really good run through 2026.
So I'm going to stick to kind of quality companies here when I answer this, because we don't cover everything in the world. We're really looking at those high quality companies that compound value over time. So there might be a more speculative, profitless tech that has good revenue. But when I think about those really high quality, highly profitable companies in our universe, I think SAP really stands out. It's going from an on-premise transition from its enterprise resource planning software into the cloud. And when they do that transition from on-premise to the cloud, they actually get a 2 to 3 times revenue uplift. And they're relatively early stage in this transition. So we've got a high level of visibility over the next few years of really, really strong revenue and earnings growth. So it's one that's really, it's not based on speculation, underpinned by really strong fundamentals.
I've flogged this horse for a long time, but it's Supply Network, and we've talked about it probably many times in the past. But Supply Network is a bus and truck part distributor in Australia, and it's the number one player in the market. It supplies independent mechanics. It's got about 15% of the market, roughly. We think it can grow its share to higher levels. It's got scale, and that scale is its moat. It's got the range of parts such that it can turn around the part quickly to an independent mechanic, and all they care about is speed and reliability, and that's what basically Supply Network provides. It's growing compound at 15% per annum at the top line, and the earnings growth has been higher. But they could actually gouge their customers if they wanted to and produce higher earnings growth, but they've actually just continued to reinvest in price and in service and speed and reliability. And so that's the sort of company that I guess keeps building out its moat, and it owns the market at the end of the day.
So the number one stock for us is HUB24. It's still got good structural growth. It's still winning market share. It's got a very high trust element to it. It's a technology that is very complicated, and clients, when they move into that system, they move into an ecosystem that they would stay with for a long time. So the stickiness of that client base is quite strong. Growth has delivered, and for me, it's also led by a technology leader. So all those things mean that's one that I am very strong and keen to hold.